Hey guys, Dave with Moniology here. Hope everyone is having a great day. Today is July 11, 2018, and this is part 1 of the precious metals sector review. Starting with the daily chart on gold. Gold looks like it wants to bottom here at that 1238, 1240 level. It happened to be the exact same level as we hit in basically between December 11th and December 18th. And this time around, actually, the momentum here was, as shown by RSI, was actually worse than it was here. So that's negative divergence. And so on the one hand, you might say, well, price wants to move lower. But on the other hand, you had a nice bounce, and at this point is right where you expect to see resistance at 1260, because those were previous points of support, basically here, and multiple levels here as well. Coincided with that 38 level of the RSI, which also used to serve as resistance at multiple levels over here, and this is basically the last time we broke down from 1326. This was the level that we broke down, and that's kind of what caused the plummet all the way down towards that 1281 level. Bottom line is, what I'm seeing here though is, despite the last couple day decline, there's some positive divergence here. So you see the 1238, we're at 1244 right now, but momentum is much higher today on the daily than it was here a couple days ago in early July. So let's see if this bottom holds, and if it does, then you want to see gold break out of 1260. If you're long the metal, that's the price that you want to be buying at. At this point, it's still a little bit risky. You see PPO broke above zero. Now it's kind of hovering back below it. So critical juncture right now on the daily chart. Looking at gold from a weekly perspective, we're still seeing some negative divergence here. So you've got momentum lower today than when we were at the same price point at 1238 before. So the question is, can we rally at this point, or are we going to head back lower towards that very critical 1200 marker? I'm not sure. I don't know, but it's going to be important to see how the actual metals are doing, miners are doing, and we'll take a look at that in part through the sector ETFs later in this video, and then again in part 2 we'll be analyzing the better looking names in the sector, so stay tuned for that. Gold on a monthly perspective is still very much in a bullish breakout pattern, and I'll just annotate this just a little bit more here for you. You notice this trend line. This trend line marks basically the breakout zone from this 5-year bear trend in the midst of a secular bull market that basically has been in place since 2002. So we had this massive rally from 2002 to 2011, killed basically any investor, long-term investor in the space, finally broke out of this, and now we're consolidating back to that breakout point. I think that this is going to serve as very strong support, but again, this is a monthly trend line, so this could go back all the way to 1200 and still be very much bullish from a larger perspective. With that said, we're below the 50 on the monthly RSI level, and that's not what you want to see in a bull market. So you want to see this rebound, and only then will that be a signal that the metal itself is ready to indeed move higher and break that 1370 level. So we'll have to stay tuned and watch what happens in this space. HUI, the Gold Bugs Index, again, weekly perspective. So far, it was showing signs of life here, but it got a resounding so far this week pushback from the 50-week moving average, shooting star here, and so that's not a positive development, and it also coincides with this 50 RSI level. No surprise that this was a stiff resistance, but one thing I will point out, that there in this particular rally there was positive divergence, and that's what you want to see. So last time we hit that 50 RSI level, we were at 106.41. We tried it again here at rather 186. We tried it again here at I would say close to 182, and we had RSI hit basically the same levels. It's slight divergence, not sure if that means anything at all, but you want to see this index break above the 50 50-week moving average at 185, basically before being confident that this is indeed wants to move long. Now looking at GDX, the gold miners weekly chart, again here we've been consolidating basically since 2017, up and down, up and down, up and down between basically about 21 and 25, and we had a nice rally here, but you draw this trend line, and every time this trend line is being hit, it seems to be getting knocked down. So until this can break that 24 level or break below that 22 level on or 21 level to the downside, there's very little direction in the market. I will point out there's increasing accumulation going on right now, and I'm seeing various different signs that suggest we're very close to a significant bottom in the space, but it doesn't look like we're out of the woods quite yet. Gold miners, gold junior miners, same thing, consolidating between 30 and 36 here for the better part of 2 years. Here, though, we are just below the 50-week moving average. We moved above it this week, got knocked below. The juniors are actually performing better than the majors. You're seeing a pickup in accumulation here. That's positive. So again, another green shoot for those making the bull case. Gold majors versus the metal, another very, very positive development over the last many months. So from March all the way to where we are today in July, the miners have actually outperformed the metal. That's precisely what you want to see if you're a bull in the space. And so although we pulled back some this week, you're seeing consistently higher highs, and you want to see what happens here, because we had the we're in the midst of a shooting star on the weekly upon rejection of the 200-week moving average of this ratio chart. But if this holds, if this 0.18 ratio holds, then I think that we're going to see continued upside in the miners versus the metal. A couple more charts here. Want to look at silver. Silver weekly, unlike gold, which broke out. Let's take a look at the gold weekly here. So gold did break out here in 2016 out of this downtrend, and it's been consolidating above this breakout zone. Silver, on the other hand, has not been able to break out above this 2016 downtrend, and so we're hovering around that crucial 16 level. If we build momentum and break lower towards 15, that'll be a pretty bearish sign. Right here, we're at the 38 level of RSI support. It's been support multiple times. Let's see if this can hold, and if it cannot hold, if it cannot recover this zone here, that would not be a positive development. But again, just going to annotate this really quickly here for you guys. This is this pennant pattern. I expected this to break to the upside, but so far it has not done so. So keep that in mind as you're looking at this particular weekly chart here. Finally, taking a look at the US dollar. So the US dollar, I've been very bearish on the dollar since this 103 mark in late 2016. I've been right on that call. Now we've kind of created an inverse head and shoulders potentially here, where you have one shoulder, you've got the head, and you're possibly making another head as well. So if this can break out above this 96 zone, that would be a very positive and bullish development for the dollar, and bearish for gold. So definitely something you want to keep an eye on out for. RSI successfully recovered above that 61 level, so that's very valuable. So let's see what happens with the dollar as it retests this 96 zone. But so far so good. It's bounced above the 200 and the 50-week moving averages around that 92, 93 level. So no surprise that it found support here. Let's see how strong this rally is. Guys, thank you very much for watching. My apologies for being out of the loop over the last couple months between various business ventures and various different projects I'm working on. It's been very challenging to make these videos, but I do want to get back into the groove of things and make these videos for you. Appreciate your support, and please Check us out at Moniology.com, stock twits at Moniology, and Twitter at Moniology. And please subscribe to the YouTube channel at Moniology to get updates when these videos are posted. Thanks, guys, and have yourself a great week.